You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. Time for a little bit of Vol Viewing, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com. Hope you've battened down the hatches for another wild week in volatility. Remember, if you don't want your party to end with Vol Views, you want to come back for a little bit of extra fun, an additional soiree, if you will, right after Vol Views, and join us for Options Oddities. Theoptionsinsider.com/pro is the place to go to join all that fun. It's been quite the action-packed a couple of months there on Oddities, so check it out if you are so inclined. As we see who's joining us on the old Vol Views program this week. First, we go out to the hinterlands of Chicago, where I believe he's on spring break. So thankfully, he's put his shirt back on and he stopped chugging beers just for an hour for Vol Views. Yes, none other than Mr. Dr. Vix himself, Mr. Russell Rhoads. Mr. Rhoads, welcome back to the show. I am happy and pleased to see that you are sober for Vol Views.
I am sober for Vol Views. It's so funny you mentioned the spring break thing. A professor from Indiana and myself, Dr. Ademiak, we actually went to a CFA event and a Kaya event yesterday in Chicago. And when people would ask us, well, you know, why'd you guys decide to come to this? We're like, it's spring break. That's what I do for spring break. And then somebody asked her what her hobby is, and she said, well, I'm here on my spring break. I think the markets are my hobby.
No one parties harder than Dr.
that.
Vix. No one has a crazier spring break than Dr.
not at
Vix.
all.
He works hard. He's got to party hard.
Exactly.
All right, and also joining us, I'm not sure how he parties over there in the hinterlands of Maine. I guess we'll find out as we are joined once again by the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to Volatility Views, sir. It's been a bit.
It has been a bit. Well, you have Mark, and I'm doing well. You know, partying, it's Lent, so there's not a lot of partying during Lent. I'm growing a beard and getting just older by the day.
There you go. With that rousing image in mind, as we're all cheered for the show, listeners, let's dive right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Vol Review, the portion of the show where we do just that. We break down the week that was, and indeed still is, on the Vol trading and trending and analysis, unusual activity side. Let's say hi to the chat folks as well. Back to you folks there. They're all excited. Getting pumped for a little bit of Vol views here. It's been another one of those weeks, listeners. We're kind of getting used to these by now. Again, kind of what everybody expected in Trump 1.0. We are getting a heaping helping now in Trump 2.0. Trump 1.0 rolls in and kills Vol for pretty much the entirety of 2017. Trump 2.0 just off to the races with all the Vol, all the intraday swings, the whipsaws, the tweets, all the stuff, again, people expected in the initial incarnation seem to be coming to fruition now. That means yet another week with more topsy-turviness, to coin a phrase out there, more whipsaws intraday. Started off the week looking decent, looking green. Powell and company coming along. Add that to the fun this week as well. It was a Fed week. And then Powell and company, after most folks had written off the prospects for aggressive or really any rate cuts this year, they did what everyone expected this week. They kept things the same. But then they maybe hinted, maybe they opened the door to having a couple of cuts this year, which I think was a pleasant surprise for a lot of people out there, it seems like, because the markets took off after that nice rally. Then later on in the week, we started to see some weakness work their way in. Today, another one of those weird ones where if you don't like what we're getting, listeners, just wait 5 minutes, because we started off the day decidedly red. It was another day of the old spookage make it into the markets. The S&P selling off almost all the way down to 5,600, about 5,605 to be precise. Man, we were just talking yesterday on the option block, people buying 0-day 5,700s for $11, $12, $14 in some cases yesterday. Those seem like a distant memory now. But then again, if you lamented this morning and you still got some of those 5,700s burning a hole in your back pocket going the way of the dodo today, perhaps, you're looking a little better now as we're coming into the start of the show. S&P still red, but only off about 0.1% at about 56.5 now. So we're halfway to your magical break-even land out there. Maybe, who knows, by the end of the show, we could be there. Dow now kind of unched, and the NASDAQ actually ticking green after also starting off the day mostly in the red. So another one of those weird ones, listeners. If you don't like what we're seeing, again, just wait 5 minutes. These markets full of surprises. That means we had VIX cash before the show, not that long before the show, north of 20, about 20 and a quarter. Still not in logins territory. By the way, I saw some people complaining about the lack of logins last week because we got there after the show. Don't get on me. I don't make the rules. Well, technically I do, but still, it has to happen during the show. If it happens later in the day, we have to have some logins integrity on the show at the end. I know that infuriated some people. You know who you are. But what can I do? My hands are tied. We have to have a clear system in place. Otherwise, there's anarchy in the world of logins. So we were north of a 20, about 20 and a quarter, 20 and a third coming in soon before the start of the show. Then we saw the saw of the whip kicking in, and now we're coming back up, and now Vol coming back down at about 1965 now as we're kicking off the show. That puts us down nearly 3 points, about 2.8 points from where we were last show. So a lot of stuff going on just today. Another spicy time to be looking at Vol. Our old pal Volley was at a 17 3/4. That's, of course, Scott Nation's Just the Facts, ma'am, at the money Vol measure. It's probably even lower than that now. Yes, it's about a 17.15. That's come down 0.6 of a point as well. So that puts it down about 2.6 points from where it was this time last week. So Volley and VIX Cash, for all the talk about them being so dissimilar, moving in lockstep kind of this week. Again, we're getting some lower levels, so that also is going to shake out some of the skew impacts that we're seeing out there. But nonetheless, let's get out to VVIX. The vol of Vol was at a 93 right before showtime. That puts us down, about 9 points from where we were last week. If we rack it right now, we're at a 91. Puts us down 11 points. Again, that just goes to show how much we have to change just in a few minutes before showtime, let alone if we try to plan this show hours or days ahead of time, listeners. Vol View is definitely one of the more challenging ones out there. All right, around the horn we go. First off, to the man who has put down his beer for the entirety of the show. At least he has promised me that. Mr. Dr. Vic, sir, another wild week of whipsaws. Say that 5 times fast. What was catching your eye out there on the vol front this week?
What's kind of catching my eye was that VIX threatened under 20 and popped back above it. And I know we segment out a curve, but the curve activity this week was, and I've been around for a while. I was reminded of that as I went to a CFA event and a Kaya event, looked around and suddenly realized I'm the old guy. You know, there's always like old guys lurking around. I think it's time for me to pass things on to the new generation. But being an old guy, you do have to have some experience. And one of the things that never seems to have ended well for the stock market is when the VIX curve is so freaking flat. And oh my God, every day this week, all the futures were within a point of each other on the close, and they are right now. And that really, I know it doesn't help. It does not help at all when you say the market is signaling some cluelessness, but the market's signaling some cluelessness. And I think I think VIX hovering around what would be the low end of a high volatility regime. How's that for a bunch of different visualizations for radio? But hovering around this 20 level, I think that's an indication as well that we're a bit on edge. But also, if you noted that VVIX is starting to come in a bit, that makes me wonder if the hedgers are thinking more about SPX as their hedge as opposed to VIX options right now, because I don't think anybody's done particularly well using VIX to hedge against the spikes. And I think they've been so freaking quick, nobody's really been able to monetize them and been very happy about the monetization.
Well, that's been the problem for a while now in VIX.
It has been, yeah.
It's a challenge. We've lamented that for years here on the show. 9 times out of 10, 99 times out of 100, you have, if you're lucky, a day and change, and that's really at the outside. Usually it's a few hours, sometimes even a few minutes to really monetize those hedges that everyone's spending so much money for and working so diligently to put on and coming up with these funky structures in a way to pay the table stakes just so they could have their seat at the table when the big move happens. And then the big move happens and it's gone before they can really do much about it. So that has been a frequent refrain. Has that happened to you, listeners? I'm curious. Hit us up. Let us know. It has been challenging yet again. If you've been listening to this show for a while, you know to be at least a little bit deft on the trigger finger. At least take some of it off. Monetize some of it in that first blush. Maybe you want to keep a little bit in your back pocket for that next leg in case we get the 1 out of 100 time where we kick up and VIX blows through 30. But the 99 times, you're going to be pretty happy taking a good chunk, if not all of it, off. Mr. Rock Lobster, same question for you. What's catching your eye out there in yet another whipsaw-y week? And what do you think about Russell kind of hitting that point yet again that if you're not quick on the trigger finger, you're not happy in VIX right now, sir?
I can confirm both that if you're not quick on the trigger finger, you will miss your sale. And I can confirm that I'm unhappy about it. So I can say Russell is factually correct on both sides.
That's the vol market now, the quick and the dead.
Yeah, I had some SPY put spreads. I tried to get a little alert out to students, and we and I own some VIX upside. And as the Thompson boys, who we don't hear from anymore because now they're in the tall grass, they were so successful in 2020, they can't even talk to mere mortals anymore. They're so big. I love their saying, if you're long vol in VIX, you don't make diddly do until you're way over 20. And if you're short vol in VIX, you don't make diddly do until you're well under 16. That 16 to 20, you know what we're going to call that for VIX? That's the unhappy zone. That's where nobody makes money trading VIX. Now, you could set up like combinations and other trades, but as far as just from a like sexy long, buy some options and watch them double in price, you ain't making nothing. So that's kind of I think that's kind of what we got here. We got the new tariff regime thing maybe coming April 2nd. Who knows? that's when, the Chinese and the Mexicans and the Canadians, it kind of all sounds like they're all, all the restaurants in the U.S. are going to come together and, converge on D.C. I kind of feel like it's Iron Chef. Which cuisine reigns supreme? And I guess I don't know what D.C. cuisine is. I guess it certainly wouldn't be humble pie out of D.C. But, we're going to see what's going on with all this. So the fact that there is a date in the future for some, I'm not going to call it clarification because that would be an oversimplification in the Trump era. But, you're going to get some news by then. I would assume that the market would shake off some of this by then. And I think that somewhat will hold volatility VIX in this range, which will probably make it even more painful for another week. Because today's the 21st, so the second isn't until after next week. I actually traded some calendars for the first time in a while around this so-called event. So all I can say is that we're probably going to get a lot of back and forth, a lot of listless. The message is the same, like Uncle Sam needs to roll some debt. The Biden administration left us a gift of a lot of short-term treasuries that have to be rolled that nobody wants to roll at 4%. That's an issue. So there's still there's an effort to get some interest rates a little lower. Again, these are all structural real problems that Congress still, both parties in my view, still do not quite understand what their job is, which I think is keeping the Republic together. However, their job is just to get reelected. So you got this kind of strange where part of the government's doing one thing, the other part of the government is trying to do something else, and we are left in the middle. The market is left in the middle trying to sort of figure it out. I believe that's where we are. I think we could stay at a 20 VIX forever, for months, not go anywhere. It's a very real possibility as these issues work their way out. One thing is clear, apparently, from Powell's statements. He's like, the economy doesn't look too bad. You don't need any help from me. There is a little bit of noise going on right now, so I think I'll back off trying to pare down the balance sheet. But for the most part, he's just kind of watching how things play out. He has yet to decry the level of federal spending in any real shape or form. Basically scolding congressmen on what are they doing? And I think from a market point of view, we're here. And then the last thing is Mag 7. There seems to be a switch out of the Mag 7 into European equities, Chinese equities, maybe equities in other places, because that trade has probably gotten a little crowded. Those stocks, those stocks ran to crazy valuations, and the fact that they're going to go down 20 to 40% probably is not bad for the health of the overall market in general as people start to look at other stocks that might go up. So I think that's what we got. It is not the easiest trading environment. Like I said, with VIX, you get a pop, take your money. I mean, I think I got a little spoiled with vol going to 29. Made a little money there, not near enough, and watched a whole lot of VIX puts go out worthless. So I think the hardest thing is, the only way VIX puts pay if there's some kind of end to the current vol regime we're in. And as far as I can see, this current vol regime started about 30 days ago. I think I had the date the 20th, 19th, 20th is really when things kind of started to heat up. And we are not yet back to that level whatsoever. So I think the extreme sell-off feels over as far as Armageddon goes. but the volatility from all these policies and stuff is going to remain, at least for the short term. At least until April 2nd. Maybe after that, things will kind of chill out a little bit. But the administration still wants lower rates, and they're going to try to do it by making, the economy slow down. We got lower PPI, CPI numbers last week. Didn't seem to do a lot. And we made kind of lower lows. So I think that's the situation we have. And I don't see it, maybe after the 2nd, there's a little more clarity. The market tends to look forward very far, very fast. So as of right now, I'm going to say murky. Murky is the color it sees going forward.
Things are murky indeed. Mr. Dr. Vix, I think you wanted to shed some light on that murk, sir.
It's more about just an example of how goofy the freaking week was one of the things that I like to do is when I see something I like on Barron's recommendation wise, like write it up using options. And they recommended the Mag 7 over the weekend. 3 times I priced out the options. And by the time I finished trying to write something up, the prices had changed so freaking much. I just gave up. So I think I'm going to write it up this weekend and just use these Friday prices. But it's just it's like you say, man, and it's not just the volatility market; it's all the markets. You blink and things change. You can't even go to the bathroom anymore.
Starting to get a sense for what we deal with every week here on not just this show, but all the shows, Mr. So moving markets are fun. They're great for content and trading, but from a content perspective, they are, I think, to put it mildly, challenging. Also, our chat is slamming you, Mr. Doc. You better get in there and defend yourself.
I got and remind them I can see what they're writing right now when I show up.
Uh-oh. Watch your words there. Watch your words there in the chat. Dr. Vix is coming. Let's see, listener. Let's see what's coming now. Is it a quick or a dead market out there? Are you quick right now? Have you been quick on the trigger finger to monetize if you've got some VIX upside in your back pocket? If you had a little bit of VIX downside, you know what? You kind of had to be a little quick on the trigger finger with a lot of that these last couple of weeks as well. It wasn't just kind of the free money train on the short vol side either. In fact, we had someone chime in, I'll see if I can find it later in the show, about just how challenging the short vol trade has been for them, I should say, for the better part of the last few months. But we'll get to that in a bit. Let's go out first now to the vol surface. Listeners, Dr. Vix talking about how it's been just remarkably, somewhat might say, hair-raisingly flat out there. It's the kind of thing you look at if you've been trading vol for a while. You're like, oh, I don't know. That kind of makes me wonder if there's something else waiting to happen. Another shoe looking to drop out there. Coming into the start of this segment, we had to just re-rack this because we were even flatter a little earlier. This rally has put a little bit more kink to the front portion of the curve heading into the weekend, as you might imagine. And now, of course, since our last show, March has rolled off the board. April coming in, taking the express elevator down today, down nearly 2 points, about 1.7 points from where it was this time last week. May getting another move to the downside, as we've been talking, down about 2.25 points now. That's down another quarter of a point or more just since the start of the show. So yeah, the front portion of that curve, but coming in now, listeners, as it seems like we got a little bit of the bull hanging out there too, at least in the NASDAQ. And let's see, the rest of the curve, as Mr. Rhoads alluded to, is remarkably flat. If you go from July all the way out to November, you're not even half a point difference between them. It's about 0.4. Not even 0.33. That's about as wide as we get out there. So yeah, if you look at that, when the VIX curve looks like a table, you could just eat off of, listeners, and nothing's going to fall off of it. It always kind of makes me wonder. It's like, what are we really pricing in? What other shoes are waiting to drop? Mr. Rock Lobster, we'll start with you, sir. Does this flat, some might say spookily flat term structure out there, sir, does it make you wonder if something else is lurking out there? Does it give you the heebie-jeebies, or is it just me?
Well, it is a heebie-jeebie type thing. I do love, and I do use, and I steal, but I do give credit, Russell's definition for a flat curve. I believe it's like 1 point back to front. I think that's his definition, but anyway, I say it is and I use it and I like it. And when I see it, a flat curve, I actually, from my students, I say, it's not so much that vol can just explode, is that the market is a little more unsure about like where short-term VIX is going. Generally in contango, you see contango, and like that's short-term VIX is down, but longer-term higher, right? When you see backwardation, I always look at that as short-term VIX is likely up, but long-term probably lower. A flat curve is like, I think this is more the market makers and just the SPX vol curve in general is like, we don't know what's going on. VIX, and then I basically use the straddle and VIX as a range for the short term, and and then try to manage around there. So it is, I think a flat curve is more we could go anywhere. I think after April 2nd, anything that's reasonable, considering stocks really have not sold off a bunch more, you could see a little lower number like 16 easily out of VIX cash. Or, he launches a new wave of tariffs and the market will short-term sell off probably once again, maybe hit the lows. So a flat curve to me, seeing those are the two things. And in the short term, though, you can just sit and if you own any options, you're sitting on them and dying. That's basically what this curve means to me currently. So there's probably a lot of room for owning VIX options near the money and selling options away from the money, trying to set up like credit situations and stuff like that. Not for the faint of heart, but that's pretty much the trade in the short term, I think. And then, traders beware. But what's hard to believe too, I'm already looking at the April cycle like it's going to be next week. And we are in springtime in Maine. Actually, we call it mud season here. But at least for another couple weeks. But I think that's what the flat curve is saying right now. So, but I don't think we're going to get a lot out of it until after the 2nd.
Flat curve where VIX options go to die, says the Rock Lobster. Well, he's not wrong right now, at least. And if you have them, you got to be quick, as we established early. Mr. Rhoads, I see you're discussing some of your recent research with our folks there. What's catching your eye in this, I'll say it, eerily flat curve, sir?
What I do find interesting with the eerily flat curve is how VVIX has come in a bit, which makes me think that we've got this big uncertainty there. Let's just say that it's like 50-50 when we got a flat curve as to what's going to happen next. But if VVIX is coming down, then you got to think maybe, and oh my God, am I going to say something bullish about stocks? You got to think maybe those concerns aren't quite out there like they have been, or at least if people believe that stocks are going to go lower, they're going to grind lower as opposed to have some sort of volatility event lower. So maybe there is an expectation out there that we're going to work our way another 5 or 10% lower. But if it's going to happen over a 3 or 4 month period, VIX isn't going to do you any damn good on the upside. So that may be, it might not be as I'm sitting here trying not to be bullish. But that may be what's actually going on here is, the nature of the drop. Maybe there's just a belief that we're going to have a slow economy. The Fed's not going to do anything either way, which won't cause excess volatility. But we're going to have to muddle through a lot of geopolitical and geoeconomical, there's a word for you, changes over the next few months. And it doesn't necessarily mean that, a lack of demand for out-of-the-money VIX calls doesn't necessarily mean that people are not concerned about the overall market. And I love it when I have a thought pop in my mind when I was about to wrap up. But has anybody ever done a seasonality study on VVIX and where we are in the VIX calendar? Like, does VVIX, when the next VIX expiration's a month off, because maybe it come under a little bit of pressure because you're not going to get as much bang for your buck with out-of-the-money VIX calls right now as you would using out-of-the-money April VIX calls when we're just a week or two to expiration.
That sounds like a perfect homework assignment for one once in future Dr. Vixer.
I'm off the chat and back to work. Okay.
Back to work for Dr. Vix, at least until a few minutes when it's time for your rundown and your sweet, sweet music plays twice. But we're not there yet. You got a couple of minutes, Mr. Rhoads. As we go out now to the land of the mothership, VIX options. It's been spicy. Things are hot. Things are popping off when VIX ADV is north of 1 million contracts. And it can hang out there for a while. Usually it gets up there and it comes right back down, not that long after. But right now, 1.13 million, up another 20 or so thousand contracts a day. Again, kind of slowing the rate of gains from the week previous. But again, it's still up there, still gaining. So interesting stuff out there. Today, not looking like we're lighting the world on fire, especially when we see that continued ADV well north of 1 million contracts now. 413, we were at 412 close to the start of the show, so we've added 1,000 contracts pretty much since we've been talking, listeners. So it's not exactly a rock'em sock'em robots day out there in VIX land. Nonetheless, we'll parse all that fun in a little bit. Out to the land of the VIX Top 10, our proprietary VIX Top 10 indicator. TM, don't you even dare think of using it yourselves without proper licensing fees, listeners. All right, let's see what we've got hanging out here today. First off, coming in, our top 10 hanging out, still at that same 7-3 level, calls over puts. But if you've been listening to the show for a while, 3 puts, nothing to sneeze at out there in VIX land. Usually we're lucky if we could find 1. 2 is a bonanza. 3, man, you're just drowning in puts at that point. Let's see if we can find Waldo and his brother and his cousin, shall we? Number 10 cost you 197,000 contracts to break into the top 10 in VIX land this week. That gets you to our old pal, the April 25s. All things considered, not the wildest strike on the board by a long shot. Number 9, 198,000 of the April 17 puts. You like those? You playing a little bit of the old VIX downside trade again? As we're saying, it is a week, a month, a year of the quick and the dead out there. So whichever way you're playing vol these days, you got to be a little bit quick on the trigger finger. Number 8, so that was number 9 was our pal Waldo, the April 17 puts, 198,000. Number 8, also 198,000. Only about 200 contracts separating number 9 and 8 this week. We've got Waldo's brother, the April 18 puts. Number 7, back to the calls, 198,000 as well. That's our magic number this week, 198. 198,900 this time, so about 300 net contracts separating the number 7 to 9 spots. We've got our old pal, the, dare I say it, extremely reasonable April 20s out there, listeners. Number 6, 210,000 of the June 42 halves. It's a day that ends in Y. There's going to be some size OI on a 42 half strike in VIX. It's just how the product rolls these days. Number 5, here's Waldo's second cousin, twice removed. It's 224,000 of the April 16 puts. We've talked about puts in this range, 16, 15 puts on the show recently. Do you think that's a bridge too far, or you think we can get there by April expiration? I'm curious. Hit us up. Let us know. Number 4, forget about the downside. We're right back at it, listeners. 227,000 of the May 75s. I do believe this is part of our much ballyhooed VIX Super Stupid, which I am very sad to report after having a couple of banger weeks. They were up somewhere around 5 million on it. Now, again, you're doing a VIX Super Stupid, 250,000 contracts. Odds are you're not doing that apropos of nothing else. You have something else against it. So we obviously don't see that leg. So bear that in mind. But that said, the option side was looking pretty good last week, up about $5 million. In fact, our buddy, the Flow Master, so entranced by this position. And who isn't really at the end of the day? The hell with 50 Cent. It's all VIX Super Stupids now. But he created a custom script just to track the profitability of this trade. And it was looking pretty good, up about 5 million. I am sad to say yesterday he reported it is now down 5 million. So we can all pour a little bit out for our old friend, the VIX Super Stupid trader. Obviously still time. May's a long way away. A lot can happen between now and May expiration. But right now, number 4, 227,000 of the May 75s. Number 3, 264 of the April 42 halves. Number 2, 276 of the April 40s, and the big dog, number 1, 427,000 of the August, going all the way out to August this time, 42 halves. And when we're talking about the big dogs, they don't get any bigger than Dr. Vix. So let's get down to a little of Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right, the song's so nice, we are legally obligated to play it twice. Mr. Rhoads, sir, I bought you some time for your research. What's catching your eye this week in VIX Weekly Options?
Interesting one. I want you and Andrew to pay close attention here because I'm questioning one, but it's so funky. I want to talk about it. But the one that's not that funky, on Monday with VIX at 2107, somebody bought 100 of the April 9th 22 calls for $1.41 and sold the 27 calls for 68 cents. Took in a net cost of 74 cents. So they're looking for a move for VIX to the upper 20s sometime between now and the second week in April. I always feel like I see a few more bullish trades that expire right after the employment number. So that maybe they're targeting that. Who knows? We'll see. All right, here's my strange trade, and it's a VIX put stupid. It's a short VIX put stupid using weeklies. It's somebody, and they did 100 lot using the March 26th options in each of these. They sold 100 of the 20 puts, 100 of the 22 puts, and 100 of the 23 puts. So what they're basically what they're looking for is VIX over 20. VIX over 23 at the March 26th expiration. They did this when VIX was at 2043. I just don't think they bought any of those three. Two of them traded right on the bid, and one of them traded very close to the bid, and they all traded together. So I don't know what's going on there. If VIX settlement next Wednesday morning is 2301, this person is a genius.
A VIX short put stupid.
Maybe didn't I have one recently where it landed right where it needed to land?
You did. You had a bullseye recently. Yeah. This one, I don't know. Short put stupid.
Yeah,
in the money.
They sold all three of them.
Yeah. First off, I guess it's VIX stupid season. We just rang the dinner bell on VIX stupids of all time.
I know.
But short. I know. I'm trying to think just in general. Forget about VIX. The number of short put stupids I've seen in any product. There's not many.
None.
And I've been doing this for a bit now. Wow, I can't think of any really off the top of my head. So there you go. That in and of itself is worthy of note, Mr. Rhoads.
Thank you very much. Yeah, I just and I might be dead wrong on this one. This is one people are like, how can you tell what the trades are? Blah blah blah. I mean, I had a decade where I was one floor away from the VIX market makers, and I could just walk downstairs and ask if I was uncertain. This is one that I would walk downstairs and ask, but I can't do that today. And the person that I normally text is off today. Spring break. All right, Tuesday, VIX at 2185. Somebody came in, and I mean, this trade will make money. I will almost guarantee this trade will make money, but I hate it. Sold 100 of the March 26 35 calls for 15 cents, and bought 100 of the March 26 60 calls for a nickel. I took in a dime. And it does look like an opening transaction. Then also on Tuesday, here's a trade I like, and it's not just because VIX has worked its way a little bit lower, but with VIX at 2208, somebody bought a couple hundred of the March 26 400 of the March 26 20 puts for 65 cents. So maybe looking for VIX to drift lower next week, although we got a lot of economic numbers next week. So we'll see how that goes. On Wednesday, with VIX in the 2080 to 2095 range, somebody bought 3,000 of the March 26 30 calls. They paid between 19 cents and 23 cents. I saw multiple buying of these options, like a few thousand a day in this 20 cent up to 30 cent range over the course of multiple days. And the open interest is up over 11,000 contracts, which is a lot for a weekly option. So somebody thinks something's happening. Somebody is really targeting something for early next week, maybe even the weekend, but we'll see. And then yesterday, somebody came in with VIX at 1992, and there was a sweet buyer. I say 1,000 of the April 9th, 24 calls. There was actually 5 lots of 999 each. So that's how they decided to divide it up in the pit. So I guess it's 5 short of 1,000. But they bought the April 9th, 24 calls for 85 cents. So they're also expecting some sort of volatility event over the next couple of weeks. And just with the state of the world, it wouldn't be shocking if we get one. But as we have noted, if you bought those calls and it looks like you're making some money, sell them. Sell them quick. Don't think about it. Sell them.
Our pro folks are thinking about your VIX stupid, Mr. Rhoads, and they're not liking it. They're not down with it either. I think I share that sentiment. It's intriguing, definitely worthy of note. I'm glad you brought it up, but it's yeah, I don't know about. Really quickly, Mr. Rock Lobster, are you down for a 3-legged short VIX put in the money? A lot of it in the money, stupid.
I was trying to think It's a harder trade to kind of rationalize, you know. It's almost like I feel like somebody just looked at VIX for the first time and threw a trade on, and they have like a lot of money.
It's priced because they looked at the index or something.
Yeah, and they have you know, and they're like, okay, I'm going to start trading VIX. You know, I got $1 million account, and you know, it feels like it. You know, I don't like this Trump guy, and he's going to wreck the market, and I'm just going to throw this on, kind of thing, because vol's going to explode, and then all these short puts are going to pay me tons of money. It has kind of that whiff, I feel. Now I could be wrong. But that is somewhat what that feels like to me.
Can you imagine if that was the case, if that was someone's first VIX trade? It was a short in the money put stupid.
Well, the thing is, you're like, I'm going to sell 100, sell 100, sell 100. Maybe it looked like a no-brainer with where we were at the time. Because VIX options relative to future, like where the futures are and the cash are, they can make things look kind of jiggy when you're looking at it the first time. You know, like, why are the calls so cheap, or why are the call puts so expensive, or, you know, vice versa, or whatever, depending on where the futures are. So anything can happen on that score. So I would say that would be my take on that one right there.
I very much want that to be the truth now. I want that to be baby's first VIX trade was a 3-legged in the money put stupid. I just love everything. They had
some grand idea, and
just, you know, as we rip on this trade, and I don't like the trade, I don't, but I feel that, I feel like my thing here is just to talk about talk about trades that are interesting. And right now, they've got an unrealized 39-cent profit on the 20s. 19-cent profit on the 22s, and 34-cent profit on the 23s.
There you go. Baby is laughing all the way to the bank.
So they could get out of it with a profit right now. This might be another one that people are working into, because there's some pretty good open interest on some of these puts. So this might be part of something.
They're listening to the show right now. We are mocking them, and they're laughing all the way to the bank, listeners.
They are, yes. Hey, look at my profit.
3-legged put stupid. I love it. Are you down for a little bit of that action? Listen, let's see what folks are down for. They're not down for a lot today, quite frankly. Like I said, we started the show around 412 in VIX. Right now, as we're coming into the VIX volume segment, we're at a whopping 415. So not a lot lighting the doors up there. The big dog today, 41,000 of the April 18 puts. Those traded, including a block of 30,000 of them for 64 cents. I think our producers will be putting up a flash poll momentarily. You a buyer, 64 cents? April straight up monthly 18 puts. You're more of a seller. You're just not interested. Let us know. That'll be live today. We'll keep it live through the podcast. You folks listening on demand can vote as well. Number 2, 31,000 of the April 40s. Number 3, 29,000 of the May 60s. Number 4, 28,000 of the May doubles. Looks like we got some more May upside action. Maybe our friend is bailing on some of his legs of the May Super Stoop. I'll have to go look and see. And 28,000 as well of the May 75s. Yesterday, equally kind of 449 on the tape. The big dog, such as it was, 20,000 of the April 30s. Followed by number 2, 19,000 of the April 17 puts. Number 3, 18K of the April 22s. Number 4, 17,000 of the April 20s. And number 5, 14,000 of the June 16s. If it sounds like I'm blowing through some of these listeners, it's because there's not a ton. Wednesday, 664 on the tape. The big dog, 69K of the April 42 halves. That strike just has some resonance to someone out there. Every month there is size open on the 42 half strike. Number 2, 46,000 of the April 25s. Number 3, 29K of the April 20s. Number 4, 27,000 of the April 18 puts. And number 5, 20K of the April 35s. Tuesday, one of the more active days of the week, 822 on the tape. The big dog, 45K of the April 40s, followed by number 2, 41,000 of the May 90s, 9-0s. And before you say, hey, that's closing something, nope, those were opening on the May 90s on Tuesday, listeners. Number 3, 41,000 as well of the April 39s. Number 4, 36,000 of the April 75s. And number 5, 31,000 of the April 20 half puts. The 75s in April were closing, if you're wondering. And then Monday, the big dog of the week so far, 1.41 million. The big dog, 120,000 of the April 15 puts. Our old friend, the April 15 puts. Followed by number 2, 61K of the April 17 puts. Number 3, 55,000 of the April 18 puts. Number 4, 53,000 of the March 20 puts. And number 5, 52,000 of the March 23s. I would normally toss to the Rock Lobster to see if any VIX trade stood out to him. And he could certainly add some in as we keep going, but we are kind of coming up against it. We've already talked a lot about VIX on a somewhat quiet week for the most part, at least volume-wise, not movement-wise. I want to get out through the realm of inverse vol, though, because it does seem like we have a little bit of breaking news in that realm this week. Mr. Rhoads, it appears that somebody looked out there at the struggles that SVIX is having and has been having pretty much since launch and said, you know what? That product, light volume, struggles with liquidity. There's gold in them there, Hills. I want to get some of that action because we got a new player in that market. Why don't you break it down for us this week, Mr. Rhoads?
They announced yesterday, or in today's first day's trading, they announced yesterday that they're launching, I know this sounds novel, an inverse VIX short-term futures ETN. The ticker is VYLD, and it gives you exposure to the front and second month VIX future contracts. And they've got a pricing mechanism where a 1% increase or decrease from its closing level should translate into a 1 point increase or decrease on the day. I don't know. I was telling Mark Longo that one of the things I do before the show, about an hour and a half before the show, I'll just Google VIX news, and this came up. So I haven't gotten I haven't tried to figure out if this 1% up or down, if that does that increase or decrease the risk. The ETN. I feel like the price was in the 20s, but I gotta pull it up real quick. I apologize. Come on, Bloomberg. You know what? Bloomberg people are gonna make me mad. But if a 1% increase or decrease is a 1 point change, what happens when this thing rallies when the index is up over 100%, which does happen.
Does raise some food for thought, sir.
Yeah, I mean, I want to get really, and Mark Sebastian used to say this, and I think people would really roll their eyes about, you really should, if you're going to trade these VIX ETPs, you ought to, he would say that you ought to read the offering. I don't think you need to read the offering, but maybe you need to scan through it and make sure you feel like you have an understanding of what you're trading. I don't feel like I would have an understanding of what I'm trading quite yet, but I'll bet you by this time next week I do.
Yeah, we're just kind of coming to grips with this right before showtime, listeners, so it's kind of fresh and new to us as well. But somebody looking right now, SVIX 2180 up 1.8 points from last week. They're looking at that sweet 7,400 contracts on the tape today and saying, you know what? I want to get a piece of that action. Worth noting, the ADV is back up 2,000 from 10,000 last week, up to 12,000 this week, but still not lighting the world on fire. Mr. Rock Lobster, you folks have been struggling to play in the inverse vol realm for the last few months. Does the prospect of a new player in that game entice you, sir?
No.
That's it. Just no. No.
I need to get back to $34, I think, and $1.50 in SVIX for me to break even on my SVIX trading. So I am right now in the reality. Again, I would say, like we just said, the Thompson brothers, like, you need zone one. You need the zone of the monk to make money in the short vol products. And you need to spend a little time there, because you gotta have that time to erode. When it doesn't, those products underperform a short position in like a VXX by quite a bit. And right now we have not been able to really hold in a one, like in the lower quartile of volatility since I think July of last year. So we're going about 9 months. I think we've tickled it maybe a day or two, but so you don't get that real thrashing on the futures you need to get those things to move. So while I will look at that product and watch it trade and start to, and when there's opportunity, whatever, but I'm going to go back to my old way to trade the inverse vol products. When you want to hide under your desk, think about buying them. All the other times, don't even bother. So they can work, they can pay, but you do need vol to get into the lower quartile. At least the way I've been watching this SVIX, the new incarnation, to trade and recall, like when we had Volmageddon prior to 2018, we spent almost a whole year in the first quartile of vol. And, all those products just, it was like the easiest layup trade ever. And that's because we were in zone one, because, VIX futures are always $2.50 over with 30 days to go. Like it was a constant melt, and we just don't have that right now. So now things could change, that could change, but as of right now, it ain't changing. Not today.
Our chat appreciates your candor, Mr. Rock Lobster. You're like, no. No interest whatsoever.
And by the way, and I'm still long it. I just need it to get back up. And I juice it a little bit with some calls every once in a while, but let's just call it is what it is. All of those calls, like looking at SVIX right now, look at how cheap the 24 calls are. They're only $2 away from the money. They're like 35 cents. In a normal circumstance, at a 19 or 20 vol, you'd be like, yeah, we're gonna, vol's not gonna hold up, and those things are an easy buy. They should double, no problem. And right now, I would say you'd be hard pressed to get that by that. But probably means this is the top for volatility in the short term. So use it as a contraindicator. I'm already going to do okay if we get up there, but I'm just saying it's getting, I'm reclimbing the mountain. I'm feeling a little bit like Sisyphus at this point. Rolling that rock back.
Well, we'll run through a couple here, and then we got to get to the crystal ball listeners. Really quickly, the rest of the vol ETPs. UVIX 3340, and they are smoking vol towards the end of the show here, listeners. 3340, it's down over 1.5 points just since the show started. Down 7.6 points on the week. Putting up 11,000 contracts today, even though the ADV going in the wrong direction. 17K down 1,000. UVXY 23.5 at the end of the show, down 3.5 points from last week. 71,000 contracts on the tape, which seems kind of light when the ADV is 146, up about 2,000. And Mr. Rhoads' favorite product, VXX 4830, down another point just in the last few minutes, down 5 on the week. 40,000 contracts up today on an ADV of 60K, which in and of itself is up about 4,000 on the week. But now it's time for us to get difficult. It's time to get dangerous. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into The Crystal Ball.
All right, listeners, and at the end of the show, we're pretty close to where we were at the start of the show, at least from an index perspective. NASDAQ up a little more, up 0.16. S&P actually down a little more, off about a tenth of a point. Dow still hanging out at unched, but Vol coming down even harder at about a 19.59 as we're coming into the end of the show, which actually, Mr. Rhoads, you're close. You're close. Let's see if we can delay a little bit. You might be able to get a bullseye. Mr. Meatball was at a 1771 last week. I was coming off my crystal ball week, I was at a 20.37. So I was looking good. Not that long before the start of the show, but we all know Vol is a fickle mistress. All right, around the horn we go. Mr. Rhoads is the closest. So I'll tell you what, I'll give you an extra 30 seconds or so here. But while you're doing that, you get to choose. You want to go first? You want to pick somebody else?
Go first.
You want me to go first? Okay, I shall go first.
Oh, go first. I said I'll go first.
Oh, you go first. Okay, go ahead.
I'll go first. Wow, it sounds like you really want to go first.
No, I'm just trying to be a fair and open host, sir.
So, see, I'm just trying to be slow to see if I can hit it on
it's moving in the wrong direction for you now.
Yeah, I'm doing what you're doing, and it's not helping me. All right, I think we'll be back above 20, so I'm just going to go with 2047.
19.65 for Mr. Dr. Vixenazo. Moving in the wrong direction. You got the opposite of the move I got last week. I'm sorry, what'd you say, 20.67? 47. All right, so a point above where he was last week. I was the next closest, I guess, so I shall go next. And I am feeling, what am I feeling for next week? I'm going to say we're back to a little bit of spice, but not crazy spice. Not maybe a scary spice, more of a posh spice at a 21.35. All right, Mr. Rock Lobster, the final word is yours, sir. What are you feeling for this time next week?
1963.
Ooh, an excellent year. Is it an excellent vol prognostication? I guess we will find out. And Mr. Rock Lobster, let's just do one final roll of the dice. Show that I am fair. 1963, Mr. Rhoads. Ain't gonna do it. 0.16 away. You have my condolences, sir. But Mr. Rock Lobster, if folks want to talk some vol, or maybe why they shouldn't give an F about this new inverse vol product with you, where should they go? What should they do?
You got it. Two-way trades, optionpit.com. Check it out. You can try to subscribe for a month and see if you like it. If you don't, all this volatility is driving you crazy and you want to sell something when the market goes down, check it out. You might like it.
You might like it, optionpit.com. And you know what, listeners? If you want to chat with Mr. Once and Future Dr. Vix about any of this fun stuff, or maybe why you love a good Vix three-legged put stupid, Mr. Rhoads, where should they go? What should they do?
That's pretty much whenever I do things. I put things out there. That's the best place to find anything that I'm doing or I'm up to. Now that spring break's almost over with, it's about time for me to start ramping some things back up. So I'll be putting a lot more on my Substack as well.
Check him out over there on his Substack, listeners. Our chat ramping up here, all kinds of prognostics. Looks like most people are above a 20 handle for next week in the VIX. We got one at an 1865. We got more coming in here. Ooh, 25 handle just popping in there. So we got a good little broad vol market. That is what makes a market. That is going to do it for us on the old vol views this week. It's also going to do it for us on the on-demand side of our broadcast network. Hope you had a great trading week. Hope you're doing well to end the week here. Remember, it's that time in the vol market, the quick and the dead, listeners. So be a little bit judicious, be a little bit, let's say, quick on the trigger finger when it comes to at least taking off some of those vol hedges that you paid so much money for. But that's going to do it for us on the on-demand side. Not going to do it for us on the broadcast week, though. We will be back, I should say, for the official after party of vol views known around the globe as Options Oddities. If you want to get past the velvet rope, only one place to go, theoptionsinsider.com/pro. That also gets you our pro Q&As. Also gets you nearly 500 awesome archived episodes of both of those shows. Also gets you exclusives like some of the takeaways we just had from FIA last week, a fun show. Save you the cost of a ticket down there. As well as, of course, awesome giveaways we are coming up. It's about a week from giving away the March. Man, we keep giving away these crates left, right, and center. Have you tried shipping anything lately? It's not cheap, listeners, but you know what? We like you folks. So get your name in the hat, theoptionsinsider.com/pro. Back again in a little bit for Options Oddities for our pro folks. Back again on Monday for the option block all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.